Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. A short video for today, but important. Tomorrow, September 5th, is the U.S. labor report. Right over here, U.S. employment report, Friday, September 5th. Pre-market, 1 hour pre-market report comes out at 8:30. And the report is going to show the hiring is probably about what the estimate is. The estimate is 75,000 jobs added to the economy, which is low for the number. But the market is anticipating this, and I say that because the market rose today, all right, September 4th. The market opened, traded above the previous day's close, then came back, closed the gap, and traded in a trend trade throughout the day on Thursday, September 4th. So does the market anticipate good news for the U.S. labor report on Friday? Well, if it is good news, there is information that would argue to the other side, because here is the CME FedWatch tool of interest rate probabilities at the next FOMC meeting on September 17th. And the probability, and before I give you that, the current target rate is 4.25 to 4.50, Federal Reserve interest rate. And on September 17th, the probability at 99.4% is that the Fed is going to lower interest rates by 1/4 of a point. So that's highly probable based on even the U.S. economic or U.S. employment report being positive. So there's some information here, and I would put more credence in the FedWatch tool. As far as the Labor Department report, the market is signaling that they expect good news. I'm not so sure. I would suggest, because the Labor Department report is a market-moving report, and even though it comes out pre-market, I would suggest that you not trade in the morning. If you are going to trade on September 5th, wait till the afternoon. Let's see where the market ends up in relation to where it opens. Okay, and so one other thing in this video I want to point out, and we're trading the ESU contract, that's the September contract. On September 15th, the contract rolls over to the December contract, ESZ, and at the rollover, or just prior to the rollover and through to the expiration on September 19th, the ESZ and ESU contracts diverge in price. So what do you track, ESZ or ESU? And so beginning about a week prior to the roll date on September 15th, which is the roll date, I'm going to be tracking the ES1 contract. And that's the continuous contract. And the continuous contract, I suggest you track that for a week before to a week after the roll date, because there is a smooth transition in the ES1 contract from U to Z. After a week after the expiration, I'll go back to tracking the ESC, but beginning on September 9th, I'm going to be tracking the ES1, and I'm going to be sending that information around to all my subscribers who receive the open, high, low, and closing prices for the E-mini. That's my video for today. Remember, tomorrow, September 5th, sort of dangerous to trade in the morning, even though it might be obvious because the report comes out pre-market. Remember, the FedWatch tool is indicating that the Federal Reserve, or the market anticipates the Federal Reserve is going to lower interest rates in anticipation of lagging or less robust economic conditions. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.